On behalf of SME Chamber of India and Tradewinds and special association with the SME Export Promotion Council and India International Trade Center, it's my immense pleasure to welcome the stalwart speakers from the factoring, trade finance, and other financial support services, particularly for today's webinar and special webinar for SME manufacturers and exporters. This webinar is going to emphasize on particularly how the trade finance is useful for the SME sector. Let me welcome on behalf of my SME Chamber of India today's very prominent speaker, Mr. Thompson Liu, Regional Manager South and Southeast Asia, FCI, Netherlands. He is going to speak on the importance and benefit of the factoring services for the SME sector and other industries. We have a very unique and very stalwart speaker from the Tradewind Finance. He based in Dubai, Mr. Peter Maerevoet, and he's heading as a global CFO and regional CEO for the Asia. Welcome, Peter. And we have Ms. Ragi Naveen, the Regional Risk Director, South Asia and Middle East, as well as she is heading the Dubai region and on behalf of the Tradewind Finance. Ragi, I also welcome you. We have Mr. Virendra Jhamb, one of the leading entrepreneur and a successful entrepreneur. He is a founder and managing director of Clean Earth Energy Solutions India Private Limited, who is a very knowledgeable entrepreneur who has worked long time with a German company and now he has started his own company. He is going to speak on the manufacturing and SME sector challenges, opportunities, and trades. We have Mr. Vimal Kanal, Director Trade Links, South Asia. He is going to speak on the blockchain technology and supply chain management. So we will welcome at this webinar. On behalf of SME Chamber of India, let me give a special thanks to Tradewind for the association for organizing today's webinar. Today's webinar is going to be very fruitful and beneficial to SME sector. Tradewind is a specialized in a cross-border transactions and the finance trade anywhere in the world for sale made on the open account, letter of credit, and documentary collection payment terms. Tradewind has been taking care to solve short-term cash flows issues by purchasing companies' account receivable in exchange for the advance up to 95% of the total invoice value. They then collect the full amount from the customer upon invoice maturity. Once the invoice is paid in full, they send the remaining balance. With an emphasis on the eliminating the trade risk, Tradewind has been offering non-recourse factoring, providing companies with a credit protection. And this is very useful for the industry purpose, especially for SMEs. The availability of the finance is essential for the healthy trading and the business system uh, for the particularly for SME sector. Today, up to 80% of the global trade is supported by some sort of financing or credit insurance. However, there are significant gaps in the provision, and therefore many companies cannot access the financial tools that they need, especially SME sector in India. Without adequate trade finance, opportunities for the growth and development are missed, especially by the SME sector in India. Businesses are the underprivileged of the fuel they need to trade and expansion. Small and medium enterprises from anywhere in the world, especially from India, they face a lot problem and hurdles in accessing the financing on affordable terms. This is a particularly concern as the SMEs are the leading driver of the trade, employment, and economic development of each country. We have observed that SMEs are facing tremendous hurdles in both the developed and the developing countries. But the challenges are greatest in the various small economies. This trend is due to their relatively small banking sector and the lack of appetite among global financial institutions to a problem which has been increased significantly since the financial crisis. Friends, we are aware that the availability of the trade finance is often cited by the businesses around the world, particularly SME sector, as a major barrier of this capacity of the trade. We should hear this call and act to improve provision. Indeed, I believe that there are a number of steps we can take. This is a report looks at this report presented by the few agencies looks that at these issues in detail. It brings together recent surveys. Even we also observe, and research also showcases that the highlight the scale of the gaps, the trade finance provisions. It considers the action that are the currently being taken in this front, and it outlines some potential future actions. Such actions could include enhancing the existing trade finance facilities programs, particularly helping the local SMEs by banking sector to grow by improving training programs, better mentoring and monitoring of the problems with the provisions, as well as in maintaining a closer dialogue with the regulators. The report which we have observed is recently that suggests that the setting specific target could be effective way of mobilizing and considering efforts towards closing the gap of the provision. We are aware that Indian SMEs are playing very vital role by providing the large employment, contributing 40% to India's exports, industrial outputs, and mainly they are creating the entrepreneurship in India. Currently, a lot of SMEs in India are facing big problem to get a trade finance, particularly on all the banking facility is a difficult task in India. But SME Chamber of India is putting a lot of efforts, and we are continuously interacting with the banking sector for providing the helping hand on time, affordable finance for them. And mostly we want to give the knowledge, education, and guidance for particularly to get the trade finance. So I will not take much time, but I would like to request all the viewers, all the listeners, and the members, those are joined today, that this is a difficult time, and we know in difficult time you need a banking finance, you need a rightly support, you need a timely support, and this is the right time to have a knowledge sharing session through this webinar. I'm sure that this webinar will give you more insight how to avail the trade finance, how to utilize the product and services available by the various banks, and especially the Tradewind and the other financial institutions, which will be useful for you to not only do compete with local market and a global market. With this word, I'm thankful to Tradewinds for joining hands with us, and I'm sure that your presentation, today's presentation, will be enlightened, will be definitely for SME perspective. With this words, I'm thankful to all of you for joining this very interesting webinar, and look forward to have a fruitful discussion during this session. So I welcome the first speaker to share his thoughts, and particularly the benefit of the Indian SMEs. Thompson, I would like to invite you to share your thoughts on the importance and benefit of the factoring. Over to you, Peter Thompson.
Thank you very much. And it's an honor to receive your invitation from SME Chamber of India. Thank you very much. And how are you doing?
Thank you.
It's a very comprehensive opening speech, and I think I can cut my 20 minutes to half, to 10 minutes only, because you've mentioned all the points already. And I've heard about Tradewind a lot in the market too. Good job. You help a lot of exporters, manufacturers securing the receivables. It's a great job actually. So I'm going to be brief about the importance and benefits of factoring. Um, I've been in this industry for over 20 years already, and we've heard a lot of names, evolution, like international factoring, supply chain finance, receivables finance, but they all come down to one thing, I think, to secure the receivables. There are a lot of benefits to this, given the various names, but I'll mention a few. Which companies and which type and which size would benefit the most? Actually, let me go with the difficulties of exporting manufacturers, what they face these days, especially small and medium-sized ones. It's difficult for them to secure the receivables. They're facing the big buyers overseas. It's difficult to connect, and most of the time, it's difficult to collect. So to sum it up, I think it doesn't matter how much profit, your profit margin is, how high it is. You need to collect it to realize your profit. That adds to the cash flow, improve the cash flow of your company and your business. But how to secure it? Okay. This bloodline that you need to survive and continue growing and succeeding in your business. We have this very unique product that's almost tailor-made to small and medium-sized exporting companies, international factoring. What are the benefits of it and the importance? As I mentioned already, to secure your receivables. It doesn't matter how much you make, it's how much you get and receive. So for the first point is how to secure it. How do they do it? Export factors, finance companies like Tradewind, how do they help? First of all, they have a team of professional collectors, okay? They manage your ledgers, they deal with the buyers overseas, sometimes even local, domestic. And except the factors, there are factoring banks too. A lot of banks in South and Southeast Asia, they have this unique division handling SME requests and cash and funding. How do they do it? By securing your receivables as collateral. And they deal with the overseas buyers. One of the benefits is to eliminate the possibility of bad debt. It's very simple, the credit check and credit screen. It helps improve the collectability of your receivables while using your receivables as collateral. So that leads to the next point, the next benefit. This is a very flexible tool that you can use, especially SMEs, because we talk about revolving loan, we talk about a secure loan, but all these other type products, they need extra security from you. That means extra collateral, like personal guarantees, like your apartment, like equipment of your business. But this one doesn't. Once you have business and induce receivables, they automatically serve as your collateral to provide you with advanced funding, sometimes even up to 80%. This, and I mentioned, is a flexible tool because you don't need to commit 100% in advance. These will be available when you have a business, when you have reduced invoices. That means only when you have real businesses from overseas that buyers buy from you, you export, then you have receivables, then you can use the product. That's why, given its flexibility, it's been very popular amongst SMEs. Also, it's easy and fast because your factors like Tradewind or finance companies or banks, they handle your ledgers, they handle your collections. Since they have a professional teams, most of the time through global network like Factors Share International, like FCI, once you become and join as members, you work with the members, you do business with them. This global network of factors, they have a professional team to collect and connect with overseas buyers. Most of the time, these professional services will prove much quicker collection. So the cycle, actually, the cycle is much quicker than you yourself collect as an SME and overseas exporter. Credit screening. One of the most important assets and benefits of working with factors is that they do credit check and connect, sometimes even call your overseas buyers to make sure that the cycle is healthy, their financial standing is healthy. Actually, it's an extension of your arm, reaching overseas to your buyers to make sure that they're healthy and they pay on time. I talk about importance, cash flow, capital, flexibility, securing your receivables, eliminating bad debt. There are some points that later on in the Q&A session, the exporters may question because there is a concept that factoring is a finance or funding of last resort. But actually, this is not true because given the flexibility and the benefits, you are securing your profit. You are sharing a very tiny portion of that profit for service, for securing 100% of your receivables, the payment that you deserve. I think we have a lot of expertise here today, like Peter and Ravi and Mimo. So I'll close it and I'll leave more time for the Q&A session because I'm sure that a lot of exporters joining who have questions about this product and how do they work. And thanks again, Mr. President, for the chance. And I'll give the floor to my next speakers.
Okay.
Thank you very much.
Okay, thank you very much. Bringing the other speaker, let me have some information from you, Thompson, that FCI is a global representative body for the factoring and finance, which is representing more than 400 top leaders in the world, companies in the world particularly. I would like to understand what is your observation particularly while dealing with the Indian institutions, the financial institutions, why they are still lacking to provide trade finance, particularly for the SME sector. You must be having the report and research and the study about that. And still, in India there are around say more than 7 crore Indian SMEs. Okay, so more than at least 70 million Indian MSMEs are there. In that, say we can think about around say 20 million SMEs are capable to avail the trade finance. But till now, the banks have reached only 2.4 million SMEs for trade finance. What is the role of FCI and how the FCI can advise the Indian banks, Indian institution, particularly in this matter?
Thank you. It's a very eligible and good question. This is not unique to the Indian market, I can assure you, because from the regions that I worked with before and currently, Indian is an emerging market, a growing market. Even though a lot of factoring banks, they start early, but considerably is still emerging and new. One of the key points for this product to grow and develop healthily is education, share the knowledge. And Indian is a huge market. It's a huge market given the number of SMEs and it's so vibrant, but it's so vast. It takes a lot of time and effort for, let's say, 10 member banks to spread the knowledge, to spread the know-how, to promote the product, to educate the exporting client base. It's not an easy job. For small and medium enterprises, of course, one of the questions you may have and one of the doubts is how flexible it is, how come it's difficult to even secure it. Sometimes it is unique to the mix of their buyers. Maybe they're all spread out. So it's difficult for banks to have a basket solution for them. And meanwhile, some of these exporters, they may find that I just want to have like this buyer in Ukraine secure. But instead, most of the factors they would prefer to spread out the risk and to include other buyers in other regions as well. You don't put all the eggs in one basket because after all, it's a risk mitigation business.
Yes.
So it's a give and take. You have to achieve a equilibrium and balance. I hope I've answered your question.
Okay, thank you. So I think we should keep the ball rolling with the same concept, same subject, and same topic through Mr. Peter. That What is your observation, Peter, particularly for India? And you can, giving this answer, you can start your speech. Welcome you.
Thank you very much. Thank you also, Thompson. I think that was a great overview, and I think the perfect road into what we at Tradewind are now going to present. Obviously, you touched upon some very important elements, like how important cash is. Cash is important everywhere in the world, and also for India, obviously. Too often companies forget about it and they think, oh, I sign a deal, I have a sales contract, everything is great, I'm happy. And then they get into a situation that, oops, my buyer has issues, my buyer doesn't want to pay, my buyer doesn't exist anymore, and then what? So those are a lot of challenges that many of suppliers, producers in India, other parts of the world are often confronted with. And that's also where we as Tradewind, we can help to better analyze the market, better analyze their potential clients, so that we can ensure that the cash flow remains stable, and we don't run into any issues. Because it's true, in the end, cash is king. It matters how much money you receive, because sales numbers, profit numbers, they're books, but what really matters is your cash. And in today's world where cash liquidity can be an issue, companies such as ourselves at Tradewind can definitely help a lot, to keep the trade going, to keep all of the companies exporting safe and healthy, and ensuring a stable cash flow, which is super important. I think I'll just give a short background about who I am, and then I'll hand over to Ragi, my colleague here in Dubai. So my name is Peter, and my last name is difficult or impossible to pronounce, so let's just leave it. Originally, I'm from Belgium, but I've lived in many parts of the world, and I'm supposed to spend my time between San Francisco, USA, and Dubai. But for obvious reasons, this year this has been a difficult challenge. In the past, I used to work for Procter & Gamble, so fast-moving consumer goods, and then 10 years for Levi Strauss, jeanswear, T-shirts, before I joined Tradewind about 4 years ago. So the finance industry is not new to me anymore, but still I have a lot more experience in sourcing and supply chain, and then specifically in apparel. And I used to work a lot with a variety of Indian suppliers who were shipping to Levi's. And then obviously we had all kinds of agreements on how the money would go back and forth. So that's something I bring to the table. With my colleague Ragi has a much longer history than I am, although she's much younger, into credit risk and financing. So she will take us through a presentation now, whereby she explains very thoroughly how we can help you, and how we can make a constructive collaboration. So Ragi, over to you.
So I would like to thank Mr. Thompson, and but before I begin the presentation, first of all, let me thank you, Mr. Chandrakant Salunkhe, for the very warm welcome extended. And before we start, we should begin with acknowledging your contribution. From what we observe is highly commendable. Clearly, your efforts and commitment to the cause of SME growth is evident. And I just want to share that we are proud to be using this platform, as we are also committed to the cause of SME financing. A very good afternoon to all, and welcome to this webinar on empowering SME growth with intelligent trade finance solutions. Today, we are conducting this in partnership with the SME Chamber of India, and I will be covering a range of topics today, and we also have a dedicated slot for Q&A at the end of the session. As Mr. Thompson clearly highlighted, I think there would be more questions than assimilation of the presentation as it is. And we would answer some of your questions at that stage. Some of the topics that we would focus on mainly will be certain changes in the global trade scenario, also the expected recovery of global trade sectors, and most importantly, the financing and growth possibilities, specifically with non-recourse factoring for SMEs. You would also understand how international partnerships can help SMEs to safely trade and continue to grow in international markets. So I trust you can all see my slides by now. So the magnitude of the crisis or the pandemic is known to all, and we're all just coming to terms with the change and disruption this has caused. Back in 2008, when we had the financial crisis, it caused the world's first known instance of a negative GDP growth rate, which was globally at that time at 0.1%. So what we are going through now can be termed as the worst economic downturn since the Great Depression back in 1930s. What we also have seen is that the extent of stringency of lockdown measures have a direct correlation with this. The length of the period of the lockdowns actually determine the level of economic contractions in countries. It goes without saying that countries which were or are dependent on tourism, hospitality, aviation, and even sectors like non-essential retail have been the worst hit. The forecast is that the global economy would contract by 4.4% this year, which is of a completely different magnitude than what we saw back in 2008. In fact, IMF revised this forecast today, actually 2 days ago. Previously, it was at a 4.9%. We see some trends in insolvencies as well. While the first half of 2020 showed a decrease in insolvencies across the world, when compared to the same period in 2019, we anticipate a surge or a rise of insolvencies all over the world in the later half of 2020. So the reason is that governments across the world have implemented changes in their insolvency regimes in various jurisdictions. Of course, this measure was to prevent a lot of companies going bankrupt prematurely. And now the forecast, especially for H2 2020, is a 26% rise in global insolvencies globally. We've also seen changes in consumer behaviors, and some of these changes are there for the good or bad, it's here to stay. There will be a tendency or a tendency to hold on cash. That is if you have surplus cash, but both businesses and individuals will continue to hold on as there is still a lot of uncertainty. Consumers may also voluntarily refrain from consumption even after the pandemic eases. We've seen this in the cases of the elderly population or so-called high-risk population. On the other hand, online demand have shot up and e-commerce has shifted from a nice-to-have function to an actual necessity. Also, we believe that there is a great potential for e-commerce players to retain these new set of consumers post-lockdowns and restrictions. We now also see a decline in the world's export to GDP ratio, and the fact is that this trend was even existing before the COVID-19 crisis began. It is indicated that the nationalistic and the protectionism measures that some of the major economies are resorting to is a reason for this kind of mismatch between the GDP growth and the export decline. Some of the reasons may be reshoring of manufacturing industries, which directly affects this ratio. There are strong advocates of reshoring within developed nations, even though we believe that any geographical concentration of any industry or value chain has its own disadvantages. We have seen that before. This also unfortunately has the impact of the economic convergence of developing and emerging economies, which we have been witnessing since the 1990s. And of course, this was due to globalization and also what we call hyper-globalization, what we have experienced before. And as I mentioned, the world is witnessing tendencies of deglobalization, and this may have an effect on emerging or developing nations the most. I need to talk a bit about ESG or environmental social governance. We know that companies previously did have ESG, and some of them, in fact, very strong in ESG matters. However, that was mainly due to an element of corporate social responsibility. It's not just only the CSR, it's also being considered as a business critical issue. Suddenly, everybody in the world is aware of how the world can really change overnight. Climate changes and disaster is a real thing. With strong ESG measures that companies put in place and also into their decision-making process, we may avoid another disaster. Of course, this is, we speak a lot about the US-China trade war, and we see which is clearly benefiting emerging economies like Vietnam, Taiwan. In fact, their exports to US increased by 50 and 30%, which is huge. As we know, India is also to benefit from this shift. For example, the recent US import ban from Xinjiang territory in China, or the duties imposed on exports from Hong Kong, are very few examples, especially in the jewelry and gemstones sector, which India is set to benefit. So let's have a look at what the forecast is for the major industries or trade sectors across the world. We can reasonably expect that trade sectors across most of the world would recover post the great global lockdown, and we can expect this recovery to happen only in a phased out manner. Well, this is not an entirely bad news considering that we have seen the breakdown of global value chains, demand shocks, and disruption, which you've never seen before. Agri-food, chemicals, IT services, we see rebounding in the first half of 2021, closely followed by electronics, rail transport, machinery and construction picking up in the second half. Household equipments, paper, metal, sea transport, and road transport, and associated equipment trade are all set to pick up in 2022. However, late recovery, however, is expected for equipment manufacturers in aircraft and automotive industries, as we know. Energy sector's recovery in 2021 would not be back to the pre-crisis levels, and that should also be reasonably recovering by 2023. In general, we've seen that agri-food, pharma, retail, especially food retail, have had no major deterioration. Of course, it is also driven by strong domestic demand as well, not only exports. The worst affected sectors are the non-food retailers, as well as air travel industry and hospitality. Let's now also have a look at some of the major industries our clients are into and how it's currently performing. The R&G, the ready-made garments and apparel sector. I think, Peter, you would be a better spokesperson for the industry. However, we see the industry focus is shifting to the value-added man-made fiber, MMF, replacing the natural fiber. Currently, the ratio of MMF to cotton is 40s to 60, which is the exact opposite in the international scenario. The global technical textile segment is expected to reach $274 billion US. And this general rise in demand is mainly driven by geotextiles from emerging economies. However, the main driver of this still remains the automotive industry, unfortunately, which is considerably decreased during the pandemic. Another key factor to consider is that this also creates generally toxic waste materials, and the reusability or the recyclability would be the definite value added advantage in that industry. Leather, as we saw, is considered to be a high growth export sector, largely driven by demand in global markets. And the major export market for India remains the US, UK, Italy, Germany, Spain, and France. The recent increase in exports can be attributed to the pent-up demand so far, so it is performing really well at the moment. Textile and yarn, as I discussed before, overall the cotton yarn exports to China was decreased by 20% owing to lower demand and growing competition from Vietnam and Pakistan. However, Indian exporters are to benefit in the medium term owing to US-China trade war regarding labor issues in China. Despite the sourcing preferences indicate a shift towards Vietnam and Pakistan, India is also considered to get a share. And one of the major reasons cited is a low cost of yarn, as we know, and also India has a logistical advantage. So the period of April to September in agro-foods and products saw a reversal in farm trade deficit as exports of essential agri-food increased. The government efforts to boost exports in the sector has played a large role in boosting agro exports to this level. Basmati rice and non-basmati rice together accounted for 57% of total exports by value. On the other hand, we see WTO members have challenged and have sought for more data on the trade practices within our country. Liberalizing agricultural trade will also have an impact on the ability to impose higher tariffs on imports, for example. Electronics is another interesting sector. We've seen a lot of planned initiatives by the government in the form of PLI, production-linked incentives. And there is also tremendous focus on exports in the sector when India becomes a global manufacturing hub. Indian manufacturers in this segment are also benefited from the US, Japan, South Korea shifting their manufacturing base from China. And apart from smartphone accessories and gadgets, there is also a possibility, tremendous possibilities in the accessories segment. It is planned that around 60% of the locally produced products will also be ultimately exported. And it's not only the OEMs like Foxconn, Wistron, Pegatron shifting their base for smartphone assembly to India, but also electronic parts manufacturing segment, which is a tremendous opportunity for India in the future. Now, coming to auto components and automobile, according to us, this is one of the most heavily hit sectors. However, component manufacturers may be doing relatively better because due to the after-sale market, the sale of tire and battery manufacturing also has a greater share of revenue coming from the replacement market, but huge liquidity pressures are observed on micro, small, medium auto component makers. The slower recovery in the global automobile industry can further pose risk to this exposed revenues as well. So how has Tradewind solutions been helping our clients, especially in some of the worst hit sectors? The past few months, especially the Q2 of 2020, has been extremely challenging and devastating for industries, especially exporters. So Tradewind's experience spans over 2 decades in global markets, and we also have experience in tiding over the previous economic upheaval, and that greatly has helped us maintain a human-centric view of the crisis and its effects to businesses. Operationally speaking, we have remained resilient and largely unaffected. I could thank God. It is during these times that our clients have actually renewed the trust on us and scope of international partnerships to tide over extreme uncertainty, especially in collecting due payments that too in unknown markets. A majority of clients are distributed across industries such as textile, ready-made garments, leather, food, pharmaceutical, as I said before, and the debtor portfolio of our clients are majorly concentrated in the US, the UK, the European Union, Australia, China, and UAE, to name a few of them. We saw immediate and sudden changes in payment behaviors of the debtors in certain industries. Debtors had started requesting for longer payment terms, payment plans, payment extensions. We have assisted our clients entirely to tide over the cycle with collection negotiations and extended financing on the new payment term. You see suddenly that from 30 to 60 days, it's extending to 120, 130, 180 days. Our expertise has helped the clients focus on what they do the best, in fact, their trade and their business, running their business. And in turn, our clients have trusted us to keep their working capital cycle intact. Tradewind has a well-developed financial offering, and we provide non-recourse factoring of purchase of receivables, which in fact is a true sale of receivables from your balance sheet, the seller's balance sheet. Our solutions have benefited SMEs all over the world, and even more during the entire and the current duration of the crisis. Let's now see the scope and the breadth of what segments and payment terms that we are able to cater to. As an international trade finance partner, we cater to SMEs and large corporates across all business segments and value chains, such as manufacturers, processors, value-added resellers, wholesalers, distributors, both importers and exporters. I would also like to emphasize service providers. Yeah, I think that is a grossly underserviced segment of the whole of SME family. We're able to fund on a variety of payment terms as well, from open accounts to LCs to cash against documents. So coming back to how does non-recourse factoring help companies, especially the SMEs? So SMEs constitute a good and a vast majority of our client portfolio. Typically, what we have seen in an SME balance sheet is that either it is heavily debt-laden or severely underfinanced. The reason we all know that banks generally shy away from SME funding, it is the fear of NPAs or lack of collateral, as our esteemed speakers highlighted before, which is completely a challenge for a smaller company. So how is Tradewind unable to provide funding to SMEs? Due to the fact that we provide non-recourse factoring, our focus or our risk is inherently the debtor's financial capability to pay back and not the client's financial positions per se. In most of the cases, receivables form the major component of a balance sheet of SME, especially traders. They're not asset heavy. These are rightly called assets for a reason, and we help them to accelerate the conversion of receivables to cash. And of course, this improves working capital cycle and tremendously benefit the cash conversion cycle. We are able to fund up to 90% of the invoice value, and as Mr. Chandrakant highlighted, 95% is possible in unique cases. And the balance 10% is released to the seller once debtors pay us directly. When we purchase the asset, we look at the risk profile of the debtors, the collection capabilities and the possibilities in the country where the debtor is domiciled. Due to the very nature of our business, we use international credit insurance companies to mitigate our risk, thereby freeing the risk of non-payment from the seller's book. It is difficult for an SME generally to develop that sort of an international capability and is clearly out of their core business competencies. And in most cases, it can be risky too without sufficient risk mitigation. We are headquartered in Germany. We serve our clients through 20 offices worldwide and across 4 continents. Our clients benefit from the kind of local expertise we have in those markets. And over the past 20 years, we have been providing liquidity for companies with our customized cash flow solutions. We also work in partnership with other lenders, enabling clients to meet all of their financial needs. Oops, excuse me. So even though we've spoken a lot about factoring, I think for the layman, it's very difficult to understand what is factoring about. I even wonder why this is simply not called receivables purchase, but this is how a typical factoring, non-recourse factoring works. The supplier raises the invoice and submits the invoice to the buyer when the goods are delivered. Submits the invoice to us when the goods are delivered. The receivables are then purchased by Tradewind and we advance up to 90% of the invoice value. And generally within 24 to 48 hours of receiving your request for financing, or even faster in some cases, we are able to fund you. Now, by Tradewind purchasing your receivables, we eliminate all credit risk by acting as an intermediary between your buyer and between buyers and sellers, covering the risk of shortfall of payment due to the buyer's insolvency or protracted default. That's a term used for non-payment of debt due to various reasons, not insolvency as a reason. Our local experts also act as an extension of your back office and perform collections on your behalf. We also act as your credit advisor and monitor the credit worthiness of your debtors. On the invoice maturity date, the buyer or the debtor pays Tradewind directly and we remit the balance 10% reserve to the supplier or the seller. I think I've now covered pretty much about it. We also encourage generally the SME community to stay abreast of developments in the international trading community and geographies. It's very important to be aware of policy changes, trends and developments. And we also have some of those resource material and news on our websites as well. And I would also like to quickly touch base on our referral program. We have a very well-developed referral network system. Therefore, we urge the brokers, agents, financial advisors, audit advisory firms to explore the opportunities of mutual collaboration. I think it's in the benefit of the greater SME community. And I think we have come to the end of the presentation. So thank you, everyone, and I hope you enjoyed this. And I think we are ready to initiate the Q&A.
Mr. Chandrakant, you're on mute still.
Okay.
Okay. Ragi, can you hear me now? Okay.
Yes,
While you are
yes,
presenting your presentation, I have received 2 important messages that, and as I assume that you have office in Chennai and Delhi, right?
We have presence in Delhi, Chennai, Coimbatore, Tirupur actually, and then in Mumbai as well.
Mumbai also
We have a
you have office?
representative. We have a representative in Mumbai.
Okay,
yes.
so he has a question that you're using trade finance facility from various banks and various institutions. How they can avail from you? Either they will approach your Mumbai office or Chennai office. You can share the contact details of the concerned person, main person of India. We will pursue that, okay? Second thing, so very interesting that the question arises for the Peter that, during this current pandemic and particularly this scenario, very difficult scenario is going on, difficult situation is going on. What is your observation that, how SME can establish cooperation, partnership, or relationship with the trade finance institution?
Yes, so I think definitely it's in the benefit of the SMEs to establish relationships with us, preferably in the trade finance community, because we can help them bridge any gap or any opening they see towards their buyers. Sometimes we're an excellent intermediary. We're very well connected to a lot of buyers in the Americas, in Europe, and in other parts of Asia. So we can even connect them to potential clients of their own. And we have actually done that in the past, that some of the SMEs we were financing and some of the buyers we were working with, we got them in touch with each other, and then they became each other's clients and suppliers. So I think that's it's not even a mutual, it's a tripartite beneficial setup that we can help accomplish. So I think we can, obviously our core business is to offer the trade financing and help SMEs with their cash, but it can go further. Obviously not on day one, but once we get to know the SME better, we know their market, we can introduce them to potential clients as well, potential buyers of them. And so then the relationship becomes a lot more strategic and long-term. And that's in the end also our goal. The better our clients are, the better our debtors are, the better the situation is for us, because it's a lot less work for us to maintain a relationship, and we can work strategically and grow together. And that's the ultimate goal.
Okay. My second question to both of you, Ragi and Peter, that what is the difficulties you are finding while interacting with the Indian SMEs? Means two ways. One is, are they lacking the information or connectivity, or they are lacking in a particularly procedural work or compliances?
You want to take it, Ragi, or you want me to take it?
Anyone, both of you?
Okay, let's then discuss what we have experienced so far. Generally, globally, and same for India as well, this is a fragmented sector, right? So that's exactly why initiatives that like this bring together, because there is they don't know the potential, the possibilities of financing, because it's very limited to traditional banking, right? So if you have to go to a traditional bank and ask for receivables financing, that is definitely offered to you, but there comes a set of huge collateral demand on SME. So maybe if you ask me, the awareness of factoring or the receivables purchase program and the possibility of international finance programs, I don't think the SME sector is fully aware. Maybe the biggest players, or maybe even sizable companies who, for example, we have a chemical manufacturer which exports to Sanofi in France. Yeah, so that's a huge. They were not aware of factoring until we actually came into play. So generally, I think the industry as a whole would benefit if awareness is increased, and I don't think even nations or countries can fully cater to the entire financing need. There's a huge gap, even if there are policy measures, there are the monetary stimuluses, how much of it actually reaches the smaller trader. So that's actually where we step in, and we are reliant, as I said, on our referral network, brokers and agents. And in fact, we've not covered enough. I think India, Peter, you would agree, we have not explored it to the extent we should have been.
Okay. That means you want to say that one is, particularly Tradewinds is having difficulty to connect with the SMEs, and my chamber is to play more role for bringing bridging the gap between SMEs and Tradewinds. Am I right?
Excellent. Yeah, that's exactly. So that's what I said. We were excited to be on this platform because the reach or the reach of SME chambers webinars and presentations covers a considerable percentage of people who are actually looking for these kind of solutions, be it trade expertise. So you would definitely have, your past events have been in bringing those experts from those sectors in those industries. So if you actually, if you bring internet financing partners all around the world, so there is a general awareness, and I think that's exactly what we are benefiting from this, the knowledge and awareness.
So you want to say that we have to create more awareness programs. We have to create more,
Absolutely.
the informative programs, because
Absolutely.
most of the Indian SMEs and Indian companies, particularly when they go for import or export, they face a big problem. And I know that a lot of SMEs in India, particularly medium-sized companies, their proposals rejected by the most of the financial institutions. What is your observation, Peter, on this matter?
Yes, and it's not just Indian SMEs who are faced with that challenge. It's something we've seen in the wider world, actually, that banks, they're usually only willing to help you when you fit exactly in a box and you tick all the right boxes. They give you a list of 20 things you have to fulfill, and if you're only fulfilling 19, they will not finance you. And then you have to find other providers of financing, and then first of all, as Ragi said, there's not a lot of awareness about this product. And so we have to work on increasing the awareness that this exists and it can help SMEs. That's one. We need to find the right people. We need to find the right organizations who can help us to spread the news and educate the people and say, hey guys, this exists. And that's why this webinar and your organization is excellent to reach that goal and to connect us with SMEs and create mutually beneficial relationships. The other point is, because there's such a big need, there will be more and more companies popping up who are going to try to offer these financing services. And you cannot guarantee that all of these companies are doing it in the best interest. And then I think for SMEs, they have to look at companies who have been around for many years, who have been doing this successfully, who can work globally, and who know their industry. So those are all parameters that every SME has to consider before going into a financing agreement. And I think we're in a very good position to help the SMEs, and specifically in India, because it's you're such a huge market with such a huge growth potential. It's almost unrivaled in the world. So there's going to be a lot of opportunities for SMEs in India to grow.
So you know that in India currently the wind is different, is bringing more rain. So your job will be to bring more trade finance with the wind.
Exactly.
This is the right time now to enter in Indian market, particular German institution. Now coming to the point, when I inaugurated the ICBC Bank. Do you know the ICBC Bank, Industrial Bank of China?
Yes.
Which is one of the fourth largest bank in the world. I have launched their India office in 2011, and the chairman has announced in his speech that we will be supporting Indian companies, those are looking for trade finance, particularly buying product from China. And you're surprised to know that why China become the largest exporter in the world, because they are providing the trade finance on time, very reasonable cost to their companies and especially SME sector. So that is a major point now because of this kind of bank. So now tell me how you are going to compete with the local institutions here in India. Those are providing the trade finance. What will be uniqueness so that I can, my team can explain to the SMEs after this our webinar, they will be approaching us for understanding the Tradewind's speciality and the helping hand towards availing the trade finance from you or any other services from you. How we can rather inform, and those listening and those watching, they will also understand the uniqueness of the Tradewind.
I'll take the question, Peter, if you don't mind.
Sure.
Yes, of course.
So I explained it before. How are we able to do this, right? So we are in no way going to compete with banks, and that's exactly not our line of business. We do a very small portion of business, which a business line which most of the banks do, and that's factoring. And I think the non-recourse possibility of factoring is also very limited. So we have definitely a unique advantage there. So if you ask me, I would not ask for loss-making balance sheets, but we do have clients who are not making profits for the last 2 or 3 years. How have we been able to fund this? Because we purchase assets, right? So the assets then becomes our assets, and that non-payment risk is on us. Of course, we mitigate it with credit insurance and things like that. So from a SME point of view, it's completely different from going to a bank for a loan. And we know how intensive that process is, not only in India, all over the world. And what collateral do you have? Yeah, so these are things which probably can help, and with awareness that your receivable it's called an asset for a reason, right? And that convertibility to cash and the period of how fast that is actually what helps SME sustain. So I think in previous discussions, what we had is that what is required at the moment is to sustain or tide over this kind of liquidity crunch or crisis. Because if you sustain, maybe you have a chance when the supply recovers or demand recovers. The threat that we see probably later after 2020 or 23, the statistics are revised every now and then, is that you have a threat of completely wiping off the supply chain. And then when the demand recovers, there's no supply. That can also happen. We don't know. We're seeing strange things now. So what we advise is, so exactly with extended payment terms, I don't think some of our clients would have recovered or survived since March, since April, that too in developed markets, right? In Denmark, in apparel sector, and related US retail. So most of the supply chain or the value chain is intact because there are financial partners bridging that gap. And that's what we do. That's a core business. In no way it can be called as a competition with the banks, but definitely it can act as a supplement, it can complement.
According to current scenario, Peter, I would like to know more from you that in a view of the current situation due to the pandemic, and do you think that economic momentum will continue, and how this will be changing the scenario, the relationship between the buyers and suppliers? What is your thoughts on this?
Thank you. It's a great question. I think we can definitely see a moderate power shift towards the suppliers and towards the SMEs over the next couple of months. Actually, it has already started a few months ago. As you know, over the last few months, many of the bigger companies, also in the USA and in Europe, have got some bad public relations, some negative media attention because they've not always paid their suppliers on time or not paid them at all, or tried to do all kinds of things to avoid paying. And naturally, a lot of them have been starting to feel guilty about their behavior. Also taking into consideration that a lot of these buyers have imposed very strong sustainability requirements, and that's for a good reason, but they've enforced a lot of investments for sustainability at the SMEs, and they've not always been willing to pay half of it or to contribute. They just said, make these investments, but don't increase your prices. And so now they're feeling a bit, they're getting the bad public relations side from it. So I think this is a great timing for SMEs to say, hey guys, we've done all this work for you. We've continued to produce for you. You've let us down. Now it is time, that you, big buyer in America or Europe, you show some, some compassion to us. And, you have to maybe, this is a good time to increase the prices, because I think there's a good window of opportunity to do it now. Because there's definitely more power now at SMEs at the side of the suppliers. And we've been reached out, many American and European companies have reached out to us in Tradewind to see how we can help them pay faster to the suppliers. In a lot of cases in Pakistan, in Bangladesh, that they're asking us, yeah, we need you because we want to pay our suppliers faster, while not impacting their own working capital. So they don't want to see, worsening working capital numbers, these big brands in the US, understandably. So we can create a win-win situation, We pay the SMEs faster, they're happy, and we're not impacting the balance sheet of the big brands. So again, it's a win-win. And I think it's part of our success story. We've grown a lot over the last couple of years. It's because we combine this knowledge of trade finance and supply chain sourcing. When SMEs reach out to us, we have got people who speak the same language. And it's not just with all respect, somebody who's only worked in the finance industry and doesn't know how a factory works. So I think having both skills is a great advantage for us.
Okay. You know that currently last 3 months time, if you look at the export import business, particularly in the September, we had seen that aluminum and another product which is not selling in the market, but medicine and pharmaceutical product are sellable in the market in a huge grown up like a 24%, and there are food products and mostly the electricals and electronics product. But there is a huge decline in a particularly gems and jewelry export. I'm talking export gems and jewelry, particularly for the product like textiles or garments and any other useful product. But another point, you can look at the imports, particularly in India. We can say that electronics all started coming up very well. Then a lot of petroleum products are all imported, and somehow the equipments and machineries are enhanced the import. And another point, if you look at the comparison with the USA, Gulf country, and China, they have increased the export. Okay, and they have increased the import. They decreased the import. Okay, so what is your rather Peter, your observation particularly on which product more the impact of this pandemic? Textile, garments, industrial products, which is more impact on the products?
I think long term the impact, setting aside hospitality sector and airlines and all of that, because that's a totally different situation. I think pharmaceuticals we will see a long-term impact, and there'll be a lot of shifts in that area between countries, because obviously a lot of countries are no longer comfortable that their pharma products are produced in other countries, and then specifically China, so they will want to see more diversification. So you'll see a lot of sourcing shifts and big changes in imports and exports in this business. Other businesses like apparel, textile, I think that's more a temporary change in terms of the volumes. So yes, there's less purchasing power, so people will spend temporarily less on apparel. One of the big things we'll see is that the weaker companies are going to disappear. Some of the weaker brands, they will go bankrupt. That's just going to happen in these circumstances. And so the stronger ones will survive, and they will get a bigger market share. So that will change the dynamics as well. But again, here, a lot of companies will want to diversify their supply chain. Look, for instance, when I worked at Levi's, I put in this role, we will source maximum 20% in any country. That's the maximum we will put in any country, because if some natural disaster happens or national strikes in one country and you lose more than 20% of your supply chain, you're in big trouble. A lot of companies, also Levi, stopped doing that, but I know they're now going back to that strategy. And so that, again, that will have a big impact, and it will create opportunities for India, because China is going to reduce in textile and apparel. That's a trend that was going on for years, and that will continue to go faster now. Of course, Vietnam, Bangladesh will increase, but given the huge expertise in India, I'm predicting that this market will become more and more important for India as well in terms of exports. The other trend I see is that they will put some production closer by as well, or they will have like cutting and sewing done overseas, but then finishing of the garments, so the last embellishments, they will do it closer by. So for instance, again, I refer to Levi's. They've made a small finishing center close to Las Vegas, where they will do the final touches on the jeans. So they don't want to do that early in the supply chain process. They want to do it later in the supply chain process. So those are trends which we will see. And it's important for SMEs to understand and learn them and see what's going on, so they can pick up which are the trends and get ready for it.
Okay, good. Coming to the point, very, very important subject that, particularly the credit risk. How significant is the role of credit insurance in evaluating the, credit risk for business, especially in these difficult times, and how can companies benefit from the factoring rather than just availing insurance from insurance providers? Ms. Ragi, what is your observation on this matter?
Thank you for the question, Mr. Salunkhe. This is a frequently asked question as well. So trade credit insurance and factoring are two different products. So I've worked in both the industries and still in fact closely working with both the industries. So you can use trade credit insurance to mitigate your risk or in the event of a default occurring, and it's a great tool. What we are able to provide in addition to this mitigation or insurance cover is actual cash. So there is a huge difference. According to me, the biggest advantage for an international company like ours, due to the sheer volume that we factor, due to the number of invoices that we factor, the pricing that we get from the international insurers are very competitive, and I don't think that this would be matched for a standalone company or even a smaller data portfolio. And especially during the pandemic, what we've seen is that the credit limits on our debtors mostly stayed intact due to the German government support to insurance companies. We are headquartered in Germany, right? The policy is essentially with the German insurer. So that benefited. Otherwise, we would have seen a big withdrawal and a disruption of a massive nature. I'm talking about the limits still in place for a huge industry that has a role. So that has also benefited us, not only as the clients and ultimately the industry, because it was some kind of integrated policy. I can go on about the benefits, but these are some of the very direct advantages. Credit insurance policies also involve timelines when you have to report an overdue. There is also a time frame beyond which you would have to stop further deliveries. The policy requirements are also, you have to bind by the policy. It's a living policy, unlike motor insurance or life insurance. And you need a dedicated team to manage your insurance policy as well. So we have this expert team locally as well as in Germany. And this is how we get this done. But I think the combination of both is a great tool, and we definitely have the advantage of offering this to the clients. And whether the international insurance companies are able to issue a policy depends upon that country's regulation. So if there are barriers of international insurance players, then you will not be able to obtain a policy also. So it is vital. That's how we mitigate our risk, and that's how we're able to, de-risk the balance sheet.
Okay, thank you. Looking at this today's discussion and particularly observation, particularly from the Peter and the Thompson and Ms. Ragi, I observe that trade finance is often described as a lubricant of the trade. Okay, but where the SME vehicle is running without fuel. The SME businesses are running without fuel because of the lack of information, lack of knowledge, lack of compliances, lack of connectivity, and particularly not understanding when and how to avail that. Around up to 80% of the trade finance by the credit or credit insurance, and particularly but coverage is not uniform. It is not uniform. Okay, a lack of trade finance is a significant non-tariff barrier to trade, particularly in some different countries, rather than especially in India also. I found that over half of the trade finance requested by the SMEs are rejected for many reasons. We can say that 7% to 8% as an observation of the Reserve Bank of India, particularly or the India perspective. The multinational companies, a global liquidity tends to be considered as within a biggest institution in their clients. Okay, and our another observation is that a new efforts to support SMEs, access to trade finance is the line set out there by Indian banking sector, particularly the trade finance, particularly the regular finance also, but not meeting that target. Because I am interacting with the Reserve Bank of India regularly, and even 10 days ago, I have asked the question to our RBI governor that looking at the funding towards MSME sector in India declined more than 66% from October 2019 to February 2020. And now look at from the March to September 30th, it must be gone minus 20, minus 200. So that is a gap. It's a gap is widening. So entrepreneur in India running their business, manufacture unit or export business, and looking at their mindset, what are the challenges and problems they face? What are the opportunities available? What are the challenges they face, and how they are going to tackle and how they are going to come out from that problem? To bring, I would like to bring the Mr. Virendra Jhamb to share his thoughts on this perspective, because he has a good knowledge, particularly working in a German company as well as working in a local company, and now he has started his own business. So he will give the right insight how the manufacturing and the SME sector can survive in this competitive era. Virendraji, floor is open for you.
Thank you so much. Ladies and gentlemen, good evening to all of you. I'm really delighted being on this platform and in the august presence of very learned speakers. I'm really thankful to the views you expressed. I enjoyed. And Salunkhe Saab, your volley of questions were really commendable. Rather, it was a question I felt it was more a kind of a guidance to us. And thank you for bringing up such kind of the questions, which was giving a knowledge also to us that we should act in this fashion. I'm really indebted to you, Salunkhe Saab. You are really presenting a new role to SME, and I really feel that the role of SME as per se it should be, which is there in a SME sector, very focused role of SME, requires a meaning in the minds of the leaders who are coming to the SME. They really come there as somebody who are sometimes looked as a bechara companies as well. I'm sorry to use this word for some of the SME companies, but they are getting guided by you, and thank you for this kind of a thing. You supported me as well way back in 2000 as when I started a nimble company, very small in Rabale industrial area, and my 35 years of experience brought it to a kind of a manufacturing exporting hub for Europe. And this was all because we could provide together with you a kind of a leadership which is needed. And during this whole presentation, I would be straightforward and I will try to present that what is really we are looking for, where we are lacking. We have to look inside us. We have to look outside as an ecosystem, but the ecosystem is present for all the companies a same kind. Then why a certain company in GIDC or MIDC can progress, or why some company should die down? We have to really introspect in the same ecosystem. And I think this is what you posed a challenge to me, and I'll try to justify that in my coming slides. Let us first examine the facts about the SMEs in India. It's around 42.5 million registered and unregistered total companies are there, which are around 95% of the total industrial units in the country. This figure 42.5 makes a really reverberating kind of a impact in the mind. SME employment opportunities around 40% of India workforce, so many people associated there. We are producing around 6,000 products, and our contribution to GDP, if we see the whole GDP, service sector and manufacturing sector put together, it is 6.11%, which is small. But if we look at the manufacturing output contribution, it is 18% and leads to around 550 billion. Exports out of this is around 340 billion. Fixed assets is really a good figure, 140 billion, and growth rate is 10%. So this is what is the sector we are talking about. If we go just across some of the developed countries by India, before this slide, whatever I wanted to present was maybe we can call it as a scenario for the developing countries. But if we go into the developed countries, their growth rate is 120%. And numbers are not so high. And their contribution is 55% of the GDP, which was around 6.5% for us. And when we look why this difference is there, the differentiator fact is that tech-savvy talent market, even Indians contribute to this kind of a SME segment in the developed countries. And there are the clear regulatory policies leading to the level playing field, which boosts competition, the incubators and all such kind of the facilities available, and many more things which will come in the next slides as well. If we look at the total number of companies present in India, the large corporates, which we can say as around more than 500 crores business doing companies, are around 1,500. The mid corporate, which are doing around 125 to 500 crores, are around 4,000 numbers of companies. We look at the medium-sized SMEs who are around 10 to 125. These are around 2 lakh. If it is small SMEs, it is 1.5 lakh, 15 lakhs, and it is micro SMEs which are less than 2 crores kind of the turnovers. They are around 6.5 million, which is a big figure. So our baseline, which is at the bottom of the pyramid, is so big, but let's see where the numbers are leading us to. Is it really the numbers which is going to give us manufacturing output from the companies and go against the competition in the export segment, or it would be quality? At this point of time, it is too much looking towards the number, and whether that ecosystem which is present is qualitatively able to deal with it, a question mark. This is a fact one of all the SMEs present in front of us. And if we look at the facts two, if we see the first column as the GDP of various economic zones, US, Europe combined, China, and India, we are ranging from $18 trillion to 2.9, and what kind of energy they are consuming around here, which is presented here in the billion kilowatt hour capacity. We go from 30,000 to 10,500. 10,500 total energy consumption consumed by the GDP of 2.9, and this is taken as not PPP basis. This is taken it as the complete GDP in nominal terms. And why that reason, if somebody asks, I can tell him that as well. And if we divide this energy consumption by the per trillion GDP, look at the figure India present. It is so intensive waste of the energy consumption, whereas what we see in the most of the segment, we are throwing the energy, whereas we are focusing more on the how to pay less to the labor. We really see and say it also that our labor is so cheap, and we are just going on that factor continuously, and we are letting it go. This is a fact number two. If we work on the energy intensity point alone, and we reach to the global standard, I think our production cost will reduce by 10%, and our labor, which is constituting the total price of any goods, is less than 6 to 7% in any company. So where we are focusing on is we have to see. So this is a fact number two. If we look at the fact number 3 and 4, cost of capex is not less than 12% in India, whereas in developing countries or developed countries it is 2%, 2.5%, and at this point of time it is zero as well as US announced, as Denmark announced, it is there. Even though our cost of capex charged by the finance company are making them fat, but actually today, if we look at the kind of the NPAs, which are no less than 5 to 6% of their total gross loans which are given, this is a true presentation of India in front of us. In Hong Kong, it is less than 1%. In China, it is less than 2%. In Japan, it is less than 1.5%. In India, it goes to 6%. So where these finance companies are leading us to by charging us 12% and wasting money on the fat sector, which is taking so much of the finance from them, and then they are causing 5% of the total loans as go berserk. I mean, this is a fact 5. And if we combine all these facts together, the inference comes in front of us is that our financial institutions, I'm sorry to use these kind of words, they do not have even the technical evaluation cell with them. They are judging us. They are really depending on the kind of the collateral papers produced in front of them. They cannot evaluate as a technical way, and it is really looking like an age-old Sahukara kind of the mentality, even in the financial sector. I have faced this for myself as well. Yes, I got a support from you, Salunkhe Saab. That was a different thing. But actually speaking, the financial institutions are not having technical cell, and they really do not put a right finger at a right place. They always go in the collaterals kind of a thing, which is really killing the various innovative startups which can come up, but they have no capacity to evaluate them. We are really wasteful in running our businesses, as the energy consumptions are really 3/4 of the developed countries. Still, we are cost competitive. Well, we are cost competitive is because of exploitation of manpower, and this is the basic reason of the brain drain from India. I have my only 5 or 10 classmates. We were around 156 in IIT. All 146 are, somebody is in Google, nobody is in India, all gone out. And we could have developed India, but who cares? No, collaterals care. Financial sectors ask the collaterals we cannot bring when we come out of the institutes. And developed countries are going ahead in the manufacturing sector just because of this kind of the brain drain is happening from India. They use these people and they are cheaper for them as well. Look at the NASCOM, the kind of the wave they had in around 80s to 90s. They have gone with the selection criteria who came to this kind of the field of the business in IT sector. It is less problem-faced sector, whereas the manufacturing sector is facing more problem. Maybe NASCOM has done something different. We have to really evaluate. But still, what are the main ingredients for a business to survive? Looking inside any SME person who comes as a startup, his leadership, I feel, is the main real ingredient. Who is the founder of the company? He should have really the passion, purpose, and persistence. He should not feel that he is going to start earning the money tomorrow. And how to survive, his goals should be clear. He should know about it completely. Never give up attitude has to be there with him. It's a really hard work. He should not feel that ecosystem is not supporting me. He should feel that can he extract out of this ecosystem available? Why next door to me somebody is progressing well and I'm not? He should think like that. He should be getting associated with a lot of data present through big data. They are not really expensive, but people do not really try that. And they should feel what kind of reality is around them, and they should not go on the assumption basis and just I make that or I would be in that kind of a business. Just entering on some kind of assumption is not good in this kind of a business scenario. Do not remain subservient to one company in the supply chain. They have to go out, and entire industry for that kind of the product range they should go, and they should improve continuously. And that has to come from the leadership himself, not looking at the ecosystem outside him. Hire the talent pool and put them in the position to succeed. That should be his criteria. Harness the potential of the latest digital technology. And this again is not so expensive. They don't go there. And this gives a deep client insight. pretty easily available and not very cost competitive situation. Stay calm under high pressure, look inside for the answers to failures, and keep moving. This is the picture I wanted to present. On your left side on the screen is a guy well suited, booted, and armored. And there is an ocean of the opportunity in front. He's not ready. He cannot be a leader to lead this kind of SME. He has to be the person who is on the right side, really himself ready to jump inside and really get into the kind of the ocean where he would be able to survive. If he has that kind of a zeal, he should enter in this kind of a segment. Otherwise, no, he's not fit for the business. People cry and take a tag of Bechara because they behave not in this kind of a leadership style, which is missing in most of the places. Fact number 6, even though government is trying, but the government cannot make the perception. Government can provide a lot of things, but it is we, the leaders, who have to take it up front. And when we see, I may be calling myself as a fortunate that I came across Mr. Salunkhe and the kind of the leadership he's taking. He took us to even Niti Aayog kind of the place as well. He took us to Commerce Ministry as well. We made presentations and we got everything done. But then I think basically this kind of the things when are available in the ecosystem, it is we who has to adopt it and go further. Looking all the time at the government is not good, because I really feel that the same ecosystem develops excellent companies in SMEs as well. And why SME has been created, if you look inside any company who's SME, we feel and we see that this is really a focused platform, which is really centered on some one mission, wherein the leader has certain mission and he has a tighter personal connections and cohesive working culture where they can go together as one family behind any innovation which is in their mind, which cannot prevail in any larger company. It is too disassociated in various departments, various political things happen in the larger companies. Leading by mission is impossible in a SME kind of working style. And in developed countries, we see that most of the ideas are coming from the SMEs, and they are becoming really the powerhouse of ideas, innovation, and creativity. And this is the biggest difference, what I realize and feel, and which when I floated my recently a company, I felt from this and started like this. And I think all the support is coming, and most of the support is being motivated by various segments, by companies around us, by clients around us, by Salunkhe Saab's vision and push towards the right goal. Even the financial sectors we went, we could do it. And I feel that this is missing from the leadership. This is my focal point. And the second focal point is SME themselves are not realizing that who they are. They are really the powerhouse of ideas, innovation, and creativity, which they have to see in themselves, employ, talent pool, and looking in the ecosystem. Bankers are really have to have a kind of a technical cell with them, and they should not charge more than repo rates plus maybe if it is a kind of idea given from SME to ministry as well, that they should charge on the repo rates a kind of the interest which is maybe they earn out of those SMEs to whom they are going to finance, and take certain EBIT out of that. Percentage sharing EBIT can be there. Then they will foster in a right manner. They will be involved. They are just asking as a watchdog, not a real supporter there. This will change if this kind of possibility, this is just an idea. If it can happen, that would be fostering together and growing together. Bankers also should feel that they are putting the right kind of the industry, and they really can earn money. And if they can earn money, they should finance them, and they should charge something out of which is beyond repo rates based on the EBIT earned by them, and they should foster this through colleges. And engineering colleges should be design institutes. We are having engineering colleges which are not design institutes, basically speaking, and they should take part, and they should be also self-sustaining technical institutes who can also charge some kind of SME fees. And then those kind of the guys who are working in those engineering colleges and technical institutes will get attracted to SMEs. If this all is together, this will strengthen the ecosystem, and then all of us can have a self-sustaining model, which is lacking a bit. It's more a watchdog kind of a situation, not as a fostering situation. So two facts in a diagrammatic form. Inside, if we look into, then it is a leadership, purpose, vision of the person who is diving inside this business as a leader, who is the owner of this SME company. He has around him to create his own ecosystem, which is a talent fostering organization structure, his outlook, and that outlook should be completely focused, as previously described in one of slide, and he has to have a kind of a behavior where he does not want to have the result tomorrow. He has a mission, vision, which is coincided by the talent inside his organization, and they should be patient enough to bring this kind of a behavior and foster this talent and grow further. So this is inside. And if we look outside, which can come from the institutions, which will create a good ecosystem to foster this kind of the companies, which of course come from leadership, which is also part of the ecosystem. The banks fostering with technical evaluation skills, which does not exist, even the best of the banks. I could not see it ever anywhere in any banking that they have a technical cell with the engineers who really know about it. Always we face only the market, the finance guys around us, and they try to ask the kind of the finance questions only, who cannot realize that whether this innovation is of a top grade or not, and then they have to go back to collaterals only, which is not going to give a kind of real situation for us. Networking and empowerment is like SME is presenting to us. It is somewhere very active, as it is in Mumbai. It is various, Pune also I felt, but it is not everywhere. In some of the sectors in RICO, I felt that it was not of the kind which are there in Maharashtra. And then big data providing real insight is present as an ecosystem, but the knowledge about this is not there, that they can go to these places and ask what is the real scenario outside them. Design institutes should be linked to this development as well. And talent acquisition. When we are seeing all this ecosystem, we see there is a balance of design, what is outside available, what is the talent, and then the banking. Mostly we hear only banking, 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 which is 20% of the total scenario of the ecosystem as well, but that should not be alone. What can motivate an entrepreneur more than this? This is a slide which is presenting certain 15 years old companies who started in India as entrepreneurs. So IEP, Indian Entrepreneur Portfolio, if we pick on the stock exchange, we see their performance from 2010 to 2020, in 10 years of the time, that is beaten the BSE 500 and Nifty as well. 1 crore invested in these companies who came up as SMEs and came on this in a large manner. They grew much better because their foundation was solid. They were not just big companies, and their foundation was solid. See, they grew, their investment in those companies grew to 5.1 crore in 10 years' time, whereas the BSE 500 could give only 2.23 crores. So that is the immense potential is there if it is looked after in a proper manner, and the leadership and the technical aspects are joined together with this SME owner. It will change the scenario. And that is what I wanted to present. And thank you, Salunkhe Saab, that you aptly gave me the right platform with the right words. And I tried my best to come to that level. And if I was wrong or correct, your questions will give me a more thought to evaluate and go further. So some time for question answer as well to you, sir.
I will not say wrong, but I will say that you have a passion, purpose, and persistence. So you are right.
That's right, sir. I see in that, and you give it to many companies, but they should approach you at right time, and they should not call themselves Bechara company, which they call and just use those kind of words, but they should not. They should not. They should come. They should come forward.
So you know these words come from where? The passion, purpose, and persistence.
Learning experience and sometimes
These words from where these words I brought.
we hear from you, we hear from various leaders when we hear them, and they say the same words. And we also see that persistence has given the results to many companies, as last slide was also there, wherein the persistence has given to those IEP companies a growth rate of 5 times. Yes, sir.
Okay, thank you.
I'm just trying to find the right
yeah,
question.
you are there. Okay. So I would like to know particularly, looking at the FCI role, which already I have asked one question, but do you have any directions particularly for the membership? Those are members from India to given the achievement or target, particular target to achieve the providing the trade finance, or they are putting their efforts for the enhancement of the trade finance. Do you have any some interaction or regular information from them?
Well, FCI is an association
Yes.
of FIs, factors, partners, banks. Each of them operate according to the business needs, and it's not FCI's mandate to give them or advise them the portion and how do they do business, but we are constantly promoting through webinars, especially in 2020, the change in regional trends, the kind of risk that we face because it's different, the challenges, especially in 2020. As Peter and Ragi has put it very comprehensively regarding the risk factors, how the pendulum swing, we call it in industry.
Okay.
These are the facts that I think our members should pay very good attention to regarding risk and how they price their models and how they provide the finance to the exporters.
Okay, good. So what we can do, Thompson, we will discuss with your the headquarter also, and we will plan one more very unique program with the stakeholders or your members, particularly from India.
Mhm.
What is their role? What is their expectation? And what is their efforts for bridging the gap? Because this gap is widening very regularly, very well, and I found that this is a really the right time. There's a need of hour to to bring that all the stakeholders together to come back to particular line that we can provide a more trade finance to SME sector for a survival. Particularly, I'm talking about India perspective.
Yes, Blue Eyes is I think the key point for tonight, that how your chamber can work with the local factors, our members, um, promoting this product, explaining this product, sharing the know-hows in a forum like this, in a e-summit like this, inviting questions from exporters. These are their potential clients, actually, and your fellow members. Great chance for them to learn about it, the trends about this product, the overall risk market in, let's say, in North American regions, in the EU regions. This will be a great chance for the whole industry to come together and then bring it to the next page.
Okay, sure. Thank you. Now bringing again Peter and Ragi, that particularly, we have some questions arrived from the members, and they have, insisting us to particularly to understand how this trade wind will be, placing very good efforts for particularly to bringing the your products to the for the SME perspective. And let me give you one very example. 5 years ago, I have met one MD of one factoring business in India, okay, in Mumbai, and he straight away said, Ragi, that I don't believe the Indian SME sector, and I'm not interested to lend them or provide any trade finance. And after 2 years, that MD approached me that we are ready now to fund MSME sector. I said, now we are not interested to work with you because you don't have a faith on Indian SME. Then how you will be going to fund again and you are thinking again to start business with them? So point is, because of the lack of information, lack of compliance in Indian SMEs, but there is a huge opportunity for the trade wind, particularly when I look at the background, the approach, and I know a lot of my members, friend circle also enjoying a lot of business from you. So I suggest come with the proper product and support services to SME sector where we can enhance your connectivity and we can enhance your products and services amongst SME sector to to target the our target which Prime Minister has projected for the five trillion US dollars economy, and we want to compete with other countries also. So what is your idea for this?
As I said before, so now the fact that you can't lend to SMEs, I do not know why the structure of the factoring company was in such a way. I assume that they were doing recourse factoring. So recourse factoring is a typical receivable finance program where you don't purchase. If the debtor defaults, you'll have to go back to the client. Uh, I don't think many want to venture into that. And as I said, the very nature of our product itself is enabling us to fund SMEs. So we've never shied away from SMEs. In fact, this is not something new that we have done in India. For example, I can take an industry like gaming and apps, right? The debtor, it's an SME and a very, very small, comprised of a couple of players, and then the exporter or the debtor is Apple. So we have been funding this client since last many years, and there is only one debtor. And because it's Apple and we know the grade and the credit risk, we were able to take that. Same applies for a very small, not a very small, I think medium-sized surgical blade manufacturer in Delhi, apparel manufacturers in Delhi, belt from Tirupur, Coimbatore. So we have this spread across sectors, and we look inherently at the data. So our value proposition now and even in prior times haven't necessarily changed. The fact that you rightly highlighted, Mrs. Salunkhe, do they have the necessary awareness, the trust to partner internationally, and generally the awareness of factoring is limited, so leave alone international factoring companies. So we have been doing this consistently over the past years, and we most of the times you get financing for all the other long-term loans and things like that, but working capital is shied away from because I think banks or the financing companies don't have the necessary structure. And as we said, 20 years in Germany with international trade credit insurers, that itself is, we've seen the ups and downs of economy and all what we have spoken about. So our proposition hasn't entirely changed, but I think this is the right venue and the time to ponder something of a larger nature. And the reach of your platform, that's what we said earlier as well, is pan-India, right? So there would be viewers of this probably hearing for factoring for the first time, and FCI for the first time. So that is a possibility. So we are willing, and I think we could take this in much deeper conversation with our marketing, business development. We have an entire dedicated team of experts coming from the core banking industry, trade insurance industry, supply chains of various industry sectors and segments.
Okay. One question is, particularly for from member that Tradewind can set up a limit for a supplier or importer receivable financing and the exporter client in India.
So the entity is looking for import finance.
Yes.
So generally what we have seen with clients is that we like to start with the debtor portfolio first. And then when we have had that relationship going on, we also do the receivable side of it. In some instances, we've also gone to PO financing, but that's not our core offering. We do that in, when the portfolio widens. So that is a possibility. But we would like to start with non-recourse factoring.
Okay. So what I can suggest you, Peter, both of you, we can think about, setting up the channel partnership between Tradewind and SME Chamber of India, because we have a SME Chamber of India, we have a SME Export Promotion Council, and we have SME Importers Association of India. So we have a three segment. One is for a local purpose, one is for export purpose, and one is for import purpose. Okay. Through that, we have more than at least 3 million SME manufacturing and exporters, and we regularly interact with them. Regularly, they are a subscriber, and they are asking for various point of some support from the financially support, from the product support, identifying the machines, equipments, and we can think about collaborating, particularly for the providing the finance, because my major role of the organization is that how we can generate, how we can channelize the funding for the better business growth. That is my efforts. So now coming to the last point, that Bimal is waiting for us now, and he would like to bring his ideas, particularly for blockchain technology and supply chain management, because this is a very, very interesting and very useful concept and topic. Not only for SME perspective, but the company perspective. So Bimal, floor is open for you now.
Thank you, Mr. Salunkhe, for the opportunity given to me and Ajay. Ajay is my colleague. We work with Maersk, and our background is in shipping, but today we will talk about technology. I also want to compliment all the speakers for a very enlightening presentation. I have been busy taking pictures, photographs of some of the slides. So thank you for this, and I will get in touch with you individually on areas of interest, of mutual interest. So I hope you will respond. Coming back to to us, I don't know how many of you know this, but India exports 8 million 20-feet containers a year, and 30% of these containers are from SMEs. So it's a very large and sizable export contribution that SMEs is making to India. And Maersk is, of course, a big carrier. It carries 20% of India's exports and imports. We have almost 20% market share in this country. And we are working with a lot of SMEs, either directly or indirectly through intermediaries. But the reason why I'm here today is to talk to you about how we are changing the landscape through digitization. And I think that it's really going to benefit all the stakeholders who are listening in today to understand what is really happening in the shipping world vis-a-vis digitization and how it can help the SME sector in particular. So Maersk and IBM have a joint initiative since 2015. They have built a platform they call it Tradewind. So it was basically a blockchain technology based on distributed ledger, where we wanted to capture data of a movement of a container from point A to point B. And that data could then be used by different stakeholders, be they exporters or their forwarders or the port terminals, either customs or any other agency that wanted to draw that information about that container. So we wanted to have only one truth and eliminate the use of paper. So this is the idea behind Tradewind. As time went by, we have also developed our products. So apart from having a distributed ledger product, we have now introduced something called the e-bills of lading and e-documentation. What that really means is that if an SME ships with any of the TradeLens foundation carriers, so it's not just for MERS, it can be other foundation carriers who are joining the platform. We have recently signed up with MSC and CMA, and hopefully in 2021, we will have other large or significant players like Hapag-Lloyd and ONE joining the platform. We already have Zim, which is being onboarded as of now. So one can say that by middle of 2021, we would have almost, 70% of the global trade shipping lines who are, subscribing to the TradeLens platform and releasing data on that platform. Now, how does this work for an SME? So if an SME ships with any of the TradeLens subscribed shipping companies, they can decide to release their bills of ladings on the platform, and that will move digitally from them to their bank, and from their bank to the consignee's bank, and then eventually to the consignee. And this product also allows you to attach different documents, up to 31 documents can be attached to the e-bills of lading. So things like certificate of origin, customs invoice, packing list, or phytosanitary certificate, or any other requirement of the buyer, that that can be met with by this platform. So I would want to show you a practical example, and Ajay will help me in that, and we'll take the Q&A after this. So over to Ajay.
Thank you. So very quickly, I'll take you through how an EBL is executed, how a shipment documentation moves across from one end to another. Shipment is done, the carrier releases a bill of lading. The bill of lading is issued to the shipper. The shipper then transfers the bill of lading to whichever party he or she is required to. It might be the consignee directly, or in some cases, the company financing the transaction, that is the bank or the trade finance company involved in the middle. Once it flows through all the intermediary and finally lands with the consignee then surrenders the bill of lading to the carrier. And the carrier in return releases the cargo to the consignee. This entire process is now capable of being executed digitally. And that's what I'll show you in the coming few minutes. So let's say that I'm a small shipper called as Wally's Weld Works. I have executed a shipment from Vietnam to Felixstowe. Now, when I click over here, I get a detailed transport plan about my shipment. So I can see that my goods have been loaded on a vessel and they are en route to reach the destination. As a next step, in order to take the transaction forward and get my money, I need the bill of lading. So here in the document panel, I can see that a bill of lading has been issued to me, BNCA 1343. When I click on view, I get a detailed document. This document is the e-bill of lading, the digital version of a bill of lading. It is a negotiable instrument and it is accepted by the various players in the supply chain. It looks very, very similar to an original bill of lading. So it has the shipper, the consignee, the carrier details, the vessel details, etc. If required, I can take a printout of the same and use it for my audit purposes, for any local customs purposes, etc. Now, as a next step, I will transfer this bill of lading along with other documents to the advising bank. When I click on the advising bank and click on the button transfer, the entire document bunch along with the original bill of lading is transferred to the advising bank. Just an update on the transfer. When I transfer it, I will lose control of the bill of lading and it will not be visible to me anymore. It will only be accessible to the advising bank. Now that I have transferred it, I am logging in as the advising bank. When I log in, I can see that the bill of lading has been received in my account. I can also view it and then along with any other document that has been attached, that is the invoice, the packing list, the phytosanitary certificate, the certificate of origin. Once I ensure everything is okay, I will transfer this bill of lading along with other documents to the issuing bank. Now I'm logging in as the issuing bank. When I log in, I see the same bill of lading CBNCA 1343 along with the documents pouched in together in my account. I will again view them as a bank. I will view them and ensure that everything is in order. And once everything has been verified, I will again transfer it to the consignee. Now I am logging in as the consignee. I can see that in my document panel, the bill of lading CBNCA 1343 along with the other bunch of documents has been received. I click on surrender to surrender the bill of lading to the carrier. The carrier shall in turn issue the cargo back to me. I have logged in as the carrier and I can see that the bill of lading has been received. Now I will release the cargo to the consignee. As you can see, the entire process from one end to another is completely digital. This cuts down drastically the amount of time required to move documents from one end to another. Thank you, everyone. Bimal, back to you for further discussions.
I would hand over to Mr. Salunkhe in case he has any questions for us or any questions received from the audience.
This presentation is very useful, and maybe SME sector will be using these ideas to utilizing there when they approach particular segment. I think Virendra Jhamb is having some suggestions on this matter. Virendra ji, do you have any question on this?
We utilize the same channels, and we knew about these functions, and they are well described now. I think we can work with them more on these facts. So this was a good to know about them here.
Okay. So we are receiving the lot of questions and some queries. So we will assess that, and we will send to concerned speakers to bring back Ragi, Peter, Thompson, so that we can have a summing up session now. And those who want to say a few words, finally, they are welcome to say. This is a good opportunity to share the final words. Peter, would you like to say something?
Absolutely. So I'd like to thank all of you, and especially on the SME Chamber of India, for this very professional organization of the webinar. It's one of the best ones, best organized ones I've attended or spoken. So really congratulations to you and the entire team. And it was my pleasure and honor to be part of this webinar. Thank you so much.
Ragi?
I echo the same words of Peter. This surpassed our expectations, and it actually gives us an idea and breadth of what you're doing. Happy to be here, and it resonates with our own costs for SME funding as well, and look forward to having such opportunities in the future too.
Sure.
Thank you, Mr. Chandrakant. Okay.
Thank you. Thompson?
Well, thank you again, Mr. President, for inviting. And I think you bring out a very, very good idea, brilliant idea indeed, is to organize the members of FCI and your members, SME members, to really push that product and bring and share knowledge. And I think that's the best way to move forward. And I look forward to it. I hope you can keep us updated and when will be the next event. Hopefully I can join as well.
Sure.
And stay safe, everyone. Stay strong.
Yes, thank you. Bimalji?
Thank you. It's been an honor to be on this platform. I realize that we are slightly on a different path than the other speakers, but we are working with a lot of trade finance people in the banking industry. So I thought it was important for us to be here and to showcase our product. So thank you very much for this opportunity.
Sure. Finally, Virendraji? Unmute, please.
Excellent topics. I don't know how you bring up so many topics. This is the second webinar I'm attending, and I found the kind of the topics you think and you mold our minds as well by thought-provoking questions as well. Thank you so much for this, and let's keep it up. Yeah.
Thank you very much, and a special thanks to Tradewinds. And I look forward the action plan by Tradewinds, particularly for providing the letter of credit finance, particularly for the supply chain finance, structured trade and commodity finance, export and agency finance, and trade credit, and even we are focusing now political risk for insurance also, because that is the most important. In the USA, a lot of companies have already started using that. After 3rd November, they are not assuming what will be happen. First of all, the corona, and then the election, and similarly in India also. So I would like to request all the SMEs and entrepreneurs, those are involved in a business and those are involved in a trade. So I suggest approach Tradewind for a particular financial support. And if they have any question, if they have any query, or they would like to have a support or hand holding, the SME Chamber of India, my team will be supporting you and will be available to guide and give you hand holding, practical hand holding. With these words, I'm thankful to all of you, all the speakers, particularly sharing your knowledge, and particularly I think very useful information to SME perspective. With these words, I'm thankful to you, all of you again, and be safe and be healthy to become wealthy. Thank you very much. All the best to you.
Thank you.
Yes, Virendraji.
Salunkhe sir, one small question. Mother of all trouble which we face in the financial sector or in the any dealing is the contract which is made between customer and a supplier is not having any kind of a judicial or lawful rights anywhere in India, which makes the whole thing goes bust. Whatever is agreed in the contract is not ever legally bound by anybody, which makes a problem.
Okay, I suggest you, this is very good suggestion, and rather a point. I suggest you to share your thoughts by email, and I will take this to the RBI governor, finance secretary, finance minister, and to the top boss for prime minister office also, because this is a very interesting thing, and we have to pursue the chamber. This is my role, and this is my objective, to support and to transform the policy, change the policy and implement the policy. Okay. So even Peter, if you have some observation, Ragi, you also, Thompson, you also, particularly the trade financial system, why the trade finance facility is not enhanced by or not provided by on time. So where we can work on, we can formulate one formula to encourage the institutions to provide adequate funding to SME sector.
Yeah.
Right. Thank you very much, and good night to you, all of you. Thank you. Bye.
Thank you so much. Thank you. Bye bye. Bye bye.
See you soon. Yes.